Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. It is down 1.5% for the week. So pretty interesting week. We had Powell's comments come out on Wednesday, and markets reacted. It shot up initially for the S&P 500, but down 1.5% for the week. So what I see here, possible, so we had this bear flag play out, right? And then it shot all the way down. Possible pennant forming right here, but I'm not really buying it. We got a death cross here. The 50 moving average is crossing below the 200-day moving average. I think we're going lower. Dow Jones Industrial Average, same kind of thing. We do have a possible, okay, you got this retracement here. This orange line is the 38.2% retracement, so it looks like it went up to just that and then dropped down below it. This one's the 50%, and this is 61.8. Same thing here. Death cross formed on Thursday. I think it's going lower. You could argue here, let me get this out of the way, and you guys can probably already see the retracement, but I'll draw it anyway. So right there to there. So right in the 38%, I could see this coming down to the 50 or the 61.8. You could do the same for the S&P 500, but for both of them, I see it going down. All right, and Dow Jones was down 2.7%. Dow Jones Industrial Average divided by gold. So this was exciting. Last week, we brought this one up, and we're like, okay, coming in for a double bounce here. Looks like it broke through that, so it's actually down a little bit lower. Could have a continued breakdown here. I do see gold having a correction here, but I think the Dow Jones will probably correct more, which would continue this downward trend here. And a quick run through of the Mag 7. So we got a lot of new people to the show. Congratulations. I'd love to have you. Welcome to the club. And I know a lot of you are in tech stocks and communications, and you've had a heck of a run. I mean, I know a lot of you have written in about, getting NVIDIA down here and, just dirt cheap, and have had an amazing run, but it's had a pullback, and you're like, how much higher do you think it could go? I think we're going to continue seeing what we're seeing here, and basically just having more and more sell-offs. I mean, I could be wrong, but that's the direction I see it going. So I think when you're going to get these spurts here like this, right? So these are probably going to sell off more next week. You might have little bounces, but as you get rallies in these, those are really nice to sell off and into. Sell into the rallies and then start buying into these commodities at some dirt cheap prices. Okay, so NVIDIA down 8.5% last week, Apple down 0.6%. Microsoft down 5.3%, Amazon down 6.6%. Google ended up getting that little pop that we anticipated with the double bottom. I don't know how much that would have paid off in an option. I didn't catch it. But down 3.8% for the week. Meta is down 7.7% for the week, and Tesla down 4.3%. So Tesla's kind of grinding sideways right around this 220 level. We'll see if it'll punch through that or not. All right, and the dollar is down 0.2% for the week. So this is kind of critical here. See, lining up with what would have been a double bottom from a couple of years ago, it broke through that. All right, so we're settling down in the 99s here. I think the dollar over the next week or so is actually going to get weaker and start breaking down. So we are hitting right around this 400 weekly moving average. Is pretty low RSI, so that would argue for a bounce on all time frames. But I also don't like that it broke this level over here. So, man, we might get a short-term pounce right here, but it's looking to me like it might continue down. And the 10-year yield fell by about 3.7% this week. So 10-year yield is sitting at 4.333, 4 1/3 right now. Bear flag played out, and then we shot up right here, and kind of looking like we're getting a bit of a pennant here, so it might actually bounce next week. We'll see how it plays out. Let me look at it on the weekly here. No, nothing there really to catch it except the 50 weekly moving average. But yeah, my bias for next week for the 10-year would be up. So possibly higher rates next week, lower bond prices. And Lobo's weekly free newsletter, he says, Fed Chair Powell dropped a bombshell this week that shocked pundits, reporters, and investors, but nowhere near as much as it should have. This wasn't some sort of surprise policy shift. It was an admission that Trump shock is more of a powerful force than the Fed expected. So this is what Powell said, and he quotes, "The level of the tariff increases announced so far is significantly larger than anticipated. The same is likely to be true of the economic effects, which will include higher inflation and slower growth." So translated, Lobo puts it in his own words. He says, translated, "Oh fudge, I didn't see any stag or any inflation coming, but now it's almost here. I have to admit the possibility where I'll look like a complete fool. At least this way, I can blame it on Trump and not Fed policy being too loose in a time of massive fiscal largesse." You can read his full report. The link is down below. For me, this is a must read every week. We'll be having Lobo on the show in 10 days. All right, the 2-year yield is down 4.4% for the week as opposed to last week. It settled out at 3.8, and when we take the 10-year yield minus the 2-year yield, 10-year yield is paying about half a percentage point more. So still kind of obeying this trend line channel here, up towards the upper end of it. And 1-month treasuries still paying 4.3%, although it looks like we might be getting a bit of a breakdown here. We'll see. Still Climbing says, "It amazes me, still very recently, some investors are still making a case for bonds. To me, that is ridiculous. I own 0% U.S. treasuries. They are poor investments." Well, yeah, I could see that, but 4.3% is better than zero. So all I'm saying is that basically if you're going to have your money in a brokerage account or something, that cash that's in there, they're actually investing that in these 1-month treasuries, and you're probably not getting this 4.295%. You're probably getting 4.1, or in some cases they're robbing you and you're getting a lot more. You know, they're getting that, and then they're basically giving you a tiny bit or something. That's what these banks are doing. You know, that's what Wells Fargo is doing with all your cash, is they're putting it in these, right? In these 1-month treasuries. They're taking all of it and giving you nothing, right? So I think this is better than that. That's basically all I'm saying. But thank you for the comments. LQD up 1.4% for the week. So got to a point down here last week. We were saying I think profit was like 600 or 700% or something. But I'm hanging out for this is a long dated put here. You know, hindsight being 2020, I guess I could have sold there and then bought back in on Thursday. I was out of the country though, so I couldn't do any trading. Well, I didn't really have time for trading. Anyways, still hanging on to this one. I think there's going to be a pretty good washout moment for this, and we might be getting a second chance here if we get a bounce up. So I may double down here. Actually, I'll take a look next week and see what the options prices are and if there's enough volume to do it. Esperan says, "I took profits on all of my LQD puts. I got up 1,000% return. Well done, sir. Wish I took a bigger position, but hindsight is 2020. Now I'm focused on dollar cost averaging into Exxon, BHP, Rio Tinto, Chevron, and AMLP. That is an energy ETF. All right, well done, sir." And Gmir, thank you for the donation. You are a gentleman and a scholar. He says, "Steve, I know I am late to the game on buying a put on LQD. Well, when you wrote that, it was down here, so you might have another chance here. If we do get another opportunity on a bounce, possibly one, I was wondering what your thoughts are on buying a put on HYG as an alternative to LQD. Could you please compare and contrast the two stocks? As I understand it, HYG is a junk bond ETF, that's correct, versus LQD being an investment-grade corporate bond ETF. Yes, that is correct. So basically, if interest rates go up, right, if they normalize, then that means that about 3 out of 4 of these investment-grade bonds will become junk. Okay, so that's what David's arguing for, is that in a time, so here's HYG, and you can see the charts look pretty similar, but this is junk bonds, right? So this is, paying high yield, but high risk as well. This is saying that it's safer, but essentially the bet is that we don't think that this is actually safe. We think that it's highly risky. And that's why we're betting on it, is that we think that most of these companies are going to turn into junk bonds. It's going to be junk, and the yields are going to go way up, which means the value of this is going to go way down. And an option, a put option on that should be quite well like SBRN experienced with 1,000% move. Okay? All right, so speaking of which, David Skrika is coming back on the show this next week. So make sure that you get your questions in, and we will be having him. You can put your questions in under the community tab under on our, where is it? On our YouTube channel. Let me share screen here and you guys can check it out. And there we go. Okay, so right here, you got home, videos, shorts, playlist. It's under posts. That's where all the questions will be for upcoming guests. So make sure you just put it right in there. Or what you can do is you can join our free newsletter, and there will always be links in the newsletter of upcoming guests and where you can submit your questions. All righty. Thank you, guys. And let's see, where are we? We are back, HYG, USD, and the Canadian dollar. All right, so Canadian dollar, US dollar divided by Canadian dollar, the US dollar lost 0.1% in comparison, so Canadian dollar is getting slightly stronger. When zoomed out on this, though, I drew this white line. There is a lot of support around that level, around 1.38. So if anything, I would expect the dollar to get stronger in relation to the Canadian dollar there. And gold is up 2.6% for the week. So outstanding, we have a new all-time high, $3,371. All right, so we got these yellow and green bars right here as far as buy zones. All right. Now, I said maybe I misspoke last week because someone said, do you think there's an 80% chance that next week gold is going to hit down in here in like the 2,800 level or something? No, maybe I misspoke, or I'm not sure. But anyways, what I'm saying here is this yellow bar, I think there's an 80% chance that we hit in this zone for gold from now until ever, right? Okay, so I'm not saying it's going to happen next week. I just think eventually it's going to happen. I think 4 out of 5 times we eventually hit that. Now, whether that's 2 weeks from now or whether that's 2 months or 10 years, I don't know. But I just think it's likely that we'll get back down into here. That's the top of that is 2970. The bottom of that is 2870. And then probably a 30% chance or so here that we hit somewhere between 28 and 2700 at some point, right? You know, governments are printing money, and they're adding more and more fiat all the time. So eventually, this chart has to go from the bottom left to the top right. But I think eventually we're going to have a little correction here. And, maybe starting next week, I think I'm going to be trimming a little bit more gold. All right, and gold divided by the S&P 500. So absolutely fantastic. Just waiting on this breakout to happen forever, and it's finally happening. So we've got resistance right about now, and then we have some pretty major resistance up here around 0.67, so be watching for that level. And CEF, Physical Silver and Gold Trust, through Sprott, is up 2.6% for the week. So if you're new to the show, this is where you want to start. Get your physical gold and silver. And first buy point I like here, we got a new red line in here at 26.50. I like a limit order. That's kind of your starter position. Maybe put 10% of your bet in there just to kind of get you started. And then after that, 25 bucks, and then 23.60. And Neil says, Steve, how does CEF work regarding being physical gold since you're buying an equity? Okay, so this one, CEF specifically, is gold and silver. I think it's about 50-50 the last time I checked. And PHYS is the physical gold fund. So maybe that's the one that you mean. But he says, I'm assuming the fund is buying physical gold, but where does the physical part come into play for the investor? Just to get clarity, if you decide to cash out and sell, does Sprott then send you physical metal, or do you just get the cash for the sale? Thanks for taking the time to reply. Also looking forward to the next Mexico vlog. Oh yeah, just got back from a trip from Mexico, so there'll be a new travel video out if you guys are interested. Okay, so basically, how can I describe this? Okay, so yes, you can physically redeem this, but this is not something that any of us are going to do. All right, I think you have to redeem these in amounts. It's something ridiculous, like 5,000. You got to redeem 5 1,000 ounce bars or something like that. Which we're just not going to do. And then to redeem the gold, it's something like a 400 ounce bar you have to redeem. So it is redeemable, right? But not in amounts that anyone watching the show is going to, you're not going to take a possession of a 400 ounce bar of gold. Like, what are you going to do? Just put that in the trunk of your car and drive around to feel cool? Like, that's what banks trade. You know what I mean? So yes, it is redeemable. Unlike the GLD ETF, that everyone buys into, this stuff you can actually redeem, which I think is important going forward. But we're not going to redeem that. I just do this air quotes of physical gold and silver because this is a way with a mouse click to become, to bet on the physical price of the metal instead of betting on these mining stocks that are inherently more risky, right? So this is a real easy way to do it. And this is a real easy one to start with CEF because it gets you into both gold and silver, ties it to the physical commodity price, and then you pay Sprott. I don't remember what the management fee is. I'm just guessing, but 0.5% a year or something like that. So keep in mind these gold and silver stocks and ETFs and all that, these are burning matches. You strike the match and you don't know how long that wooden part of the match is before it starts to burn your finger. You know what I mean? So these are not meant to be held over a long period of time. I mean, if I zoom out on this thing, like you had an amazing run rate here into 2011, and then it was just awful for 2015. You just lost massive value, and then it finally started to climb again. So we're going to need to take profits like we've been doing. So we've been buying in here, right, and taking profits up here. You're going to need to do that in these, or you're going to get smoked. Okay, back to business here. PHYS, thank you for the question, Neil. Good question. Up 2.8% for the week. So set your limit orders. Got some new lines in here. So $22.50 for your starter, then $21, then $20. GDX up 2.5% for the week. I might be taking more profits in this. So it took some profits week before last on Friday. And so we hit an all-time high there for GDX, which is pretty exciting. It got all the way up to, what is that, 52.80, 52.81, pretty snappy. But, I think we're getting pretty stretched in the gold stocks here, so you might want to be taking some more profits. And GDXJ, same kind of thing, up 4.7% for the week. So like GDX, there's no buys now. We're in the profit-taking zone, right? Franco-Nevada, the best gold royalty company on the planet, is up 2.9% for the week. So I've been saying that I've been going to wait for the Cobre Panama. I might be changing my tune here. Okay, we're smoking all-time highs here. Broke above it. I mean, essentially had we could call that a double or quadruple top. Broke above it. I might be taking some profits here, actually. I might be eating my own words. I'm not going to sell everything. Let's get that clear. But I think I might be taking some profits here in Franco-Nevada, even for me. All right, and Gold Royalty Corporation is up 7.2% for the week, so there's no buys here. If you wanted to trim, I don't think that would be a terrible idea, but I don't think I'm going to trim. But, we broke through this resistance line. Basically, the new one is there now, up at like $1.75 or so. It lines up with some back support right back there. But just slowly climbing higher. Haven't adjusted these yellow and green lines yet just because this thing is so volatile. And if we get a sell-off in gold, they might actually hit down here to $1.25 and $1.18. But I'm not selling any, but if you want to take profits here, I think a sell order around $1.75 or $1.70 limit sell might be good. All right, and Origin Royalties down 0.4% for the week. So I think anything below $1 is a smoking deal. You got a moment in time here, week before last, it got down to like low 90s, which was pretty cool. What was that, 92 cents? So I think a limit order anywhere around there. Basically waiting on when do we get the Altius arbitration? So the more time that goes by, that window's closing. We rescheduled with Patty Nickel, the CEO of this company, to Friday, May 2nd. So looking forward to that. And Barrick Gold is down 2% for the week. So a lot of investors have realized that gold is up, and the quarter four financials for these companies were when gold was, $700 or $800 less an ounce, and oil was about $10 more. And, diesel being one of their main costs. I may be trimming this one again. Earnings are coming out on this one on May 7th. We'll see. But getting up towards this white resistance line right here, we've had some massive runs in this thing. Took some profits here, got back in down here, and might be taking some profits again. We'll see. Same thing for Newmont, up 0.2% for the week. So this is going fantastic. Might be trimming again here. Got in way back here. Had a massive run, took some profits, got back in again, and now we're up high again. Might be taking some more profits. They have earnings next week on April 23rd, so I think I'm going to wait for that. I think some of this is people waking up and realizing that gold's had a heck of a move, and the miners haven't moved as much as they should. I think we might get another little pop on Wednesday, and that's probably where I'm going to trim. Time will tell. We shall see. Agnico Eagle up 3.3% for the week. So I have a zero cost basis on this thing. I got in back down here at $45, and then once we got a double, I moved past the point of concern. So this is all free and gravy to me. I think it's now like 1.5% of my portfolio, and I have a zero cost basis. So I might actually be selling a little more here. I think we are due for a pullback in these, and we'll see. But we do have earnings coming up next week on Thursday. So this one in Newmont, I'll be watching like a hawk on Wednesday and Thursday, and make my decision then. B2 Gold up 2.5% for the week. I was going to run another option, then just missed it. I was looking at it at this 250 line, and it got within a nickel of that and just didn't hit. But I know a lot of you guys did, and you got in here at 255. And let me just show you here what has happened in the last short little time. You are up 30% in 10 days. Okay, so do what you want, but that's not supposed to happen. Okay, so this is a massive run, getting stretched on the technicals here. 30% in a week and a half is yeah, that's amazing. Not a financial advisor. This is not financial advice, but for God's sake, take some profits. Okay, Equinox Gold is up 2.8% for the week. So another one, massive move right here for you traders, okay? For the traders in the crowd that got right here on the 200 moving average like we're talking about, massive run up, 20% in about the same amount of time, in about 10 days, okay? I'm holding on to this one for the long run, okay? That's just me, and especially if you have in taxed accounts, I don't know that I would be doing this, but I think any buys down here along the 200 moving average, which is around $5.90, and then the bottom part of the channel right here. So this channel has been pretty predictive and accurate, and I think we're up towards the top of that, so we're probably going to have a correction here. All righty, and G Mining Ventures, love this company. They'll be out at the symposium. Hope to see you guys there. There's a link down in the pinned comment below. Another mid-tier, I put in a new red line right here, so starter position at $13. Hopefully it'll get there. It probably will. And then $11, and then $9.50 is your backup. The truck and Seabridge Gold. So I put the $10 mark as the buy point on this one, and I personally myself missed it. I actually even told Rudy Frank about this one, the CEO of this company. He was curious when he found out I was a technical guy, and he's like, well, what price point interests you on Seabridge Gold, before you'll start trading it? And I said, $10. Look at that. We just got it. So went over companies like this so far that Rick has interviewed for the symposium, and we're going to do all of them. So Albert and I brought them up on the charts and pontificated about certain buy points and levels and picked up patterns and everything. So we're going to be doing more of that as more of these interviews come out and as we get closer and closer to the symposium. And that is only available in the Rule Classroom. So Talked about concepts just like this with Seabridge, and turned out to be perfect timing because it was sitting right around the $10 mark. And look at that, in just a few days, I mean, you had a 25% move, just bam, right up there. So perfect, perfect timing. Link will be in the pinned comment below and the notes below. Join us in the Rule Classroom, and I hope to see you there. By the way, it's my favorite price. It's free. Alrighty, and Rio 2 is up 0.25% for the week. So this should be a great one. I think just basically buy on pullbacks. You know, if you want into this one, they're building a mine, and you know, typically when they're done building the mine, that's usually when it's the most valuable because it has the most gold in the ground there. They haven't, you know, extracted it yet. So that's going to be probably our exit point, or at least one of them. Maybe that might be where we move past the point of concern. I like the level right here of 57 cents and then 49 cents and then 41 as a stink bid. All right. And where are we at? Silver is up 1.75% for the week. So it just had a massive sell-off there and then spiked right up. Closed the week at $32.47. I like buys back to these pullbacks here. You know, if you can get physical silver for less than $30 an ounce, that is an absolute steal. I don't know that with the premiums and stuff that you'll ever actually be able to get that again, but if that moment comes, then I would be doing it. And gold divided by silver, looks like gold outperformed by 0.8% for the week. So last week it was 101 ounces of silver to 1 ounce of gold. Now it's 102.5 ounces to 1 ounce of gold this week. And Yarrick wants to know, he says, what are your thoughts on the gold-silver ratio being over 100? Not much, other than simply that silver is relatively cheap compared to gold. So if someone wanted to trade a little gold for silver, I think that would be better than trading silver for gold. Yeah, that's basically it. It's just a comparison value. You know, I'm not one of these guys that thinks that it's going to revert to the ratio that comes out of the ground at it, like 8-to-1 or anything. I don't think that's going to happen. I don't even think it'll go to 15-to-1. I think it, you know, it may settle out. Like once we get down to like this 75-to-1, I might actually trade a little bit. But you know, the level I'm looking to literally like trade some silver for gold would be probably in the low 60s, and then again, there's quite a bit of support around like 45-to-1. So that's basically all I use it for, is like which one's cheap. Okay, PSLV. This one is up 1.9% for the week. So went through the 200-day moving average, then popped back up out of it. I like this one as a first little starter position here at $10.50. Then $10 has a lot of support right around it, and then $9.50 as a stink bid. And SIL is up 3.3% for the week. Now, what's interesting here? Okay, so back here, basically the end of March. Let me go back to the silver chart. Right here, we're at $35 silver, right? End of March. And then we didn't close the month on that. It just shot down. So look at where we are here on silver. We're at $2.50 cheaper. But look at where we are on the miners now. So back here, end of March, you know, this was at $40 on this silver miners ETF. And then now that silver's $2.50 cheaper, this is actually more expensive at $41.55. I think we might be a little ahead of our skis here in the silver miners. So any profits that you wanted to take, I don't think now's a terrible time in these, in SIL. And then SILJ is up 1.9% for the week. Same kind of thing. Look at this. So back here, end of March, it was around $12.60, and now it's around $12.60, but we're $2.50 cheaper. So could be a little trimming position here for SIL, but stink bids on this one still $9.75 and $9. And then Pan American Silver, I missed my moment here. Didn't have a limit sell order. I guess in hindsight's 2020, I should have at $28. But this seems to pretty predictably be trading within this parallel channel line right here. So we're definitely on the profit-taking zone part on the upper end of that. And then I like a starter position in Pan American Silver at 24, and then 22.50, and then a stink bid down here at $19. But yeah, That is how I feel about silver. And moving on to copper. Paging Dr. Copper is up 4.8% for the week. So just treating copper like we were taught by Brian London, Adrian Day, and Joe Mazumdar. We're buying copper on pullbacks. Copper's up 4.8% for the week. Still kind of obeying this trend line, although we did pierce it pretty significantly. But luckily did not close and break below it, so that's good. And as far as gold divided by copper, it is gold underperformed copper, or we could say copper outperformed gold by 2.1% for the week. So it now takes 702 pounds of copper to get 1 ounce of gold. And copper, Sprott's Physical Copper Trust is down 2.1% for the week. So I like this level around $7. Then stink bids down here around $6, which very unlikely to hit. COPX is up 2.3% for the week. So had some massive sell-offs here, great buying opportunities, and then shot right up. So pretty exciting on that. Closed the week at 36.35. I don't really see any buys right now. I like limit orders here at 32.50 and then a stink bid at $29. COPJ up 6% for the week. So this worked out perfect with our limit orders that we had down here forever. We had limit orders at 1775, 1735, and then 1655. Just boom, hit right through all those and then shot right up. Like this one a lot. I don't see any orders right now. I would wait and I would put those same numbers in that I just said for your next limit orders. Freeport down 1.4% for the week. So your limit orders hit at 26. What were your limit orders in? I can't remember what they were. Maybe it was $30 or right around here. Shot back down. Next one I like down here for Freeport is going to be 26.60, and then after that a stink bid in at $19. I don't think the $19 one will hit, but if you don't put it in, then it's impossible for it to hit. Still in a downtrend here. Eager Beaver says top copper producers are Freeport, Codelco, and then BHP. So thank you for that information, sir. Love it. And where are we? Oh, Maduro Capital is, where are we? Lost my place. There it is, up 1.4% for the week. So I'm sticking with it. Looks like we got a bear flag ironing out here. You know, not sure how much credence we can put into technical analysis on this one other than just using price action going back right here. I like a limit order at 11.15, although I'm not sure that that one will hit. And uranium is up 1% for the week. So the spot price of uranium up 1% for this week. Looking very interested. This is my interested face in uranium again. Very, very interested. So interested, in fact, that we're going to have John Chapaglia on the show for the first time. Okay, so really excited about that. History in the making. He will be joining us Wednesday, so make sure you get your questions in under the post tab. And also check out our free newsletter. And as the name would suggest, it's free. There's no spam. I'm not going to sell your email to some marketing company or something. It's just you and me. One email once a week, no BS, just down and dirty. Comes out 1 p.m. Eastern time every Sunday. You get it before the market opens on Monday, so you get some ideas, right? May not have time to watch all the content every week, and even if you do, it's a great summary of all the concepts that we learned for the week, and just a one-stop shop plan for the next week, and all the links for future guests and where you submit your questions and anything else and any thoughts that I have and special deals, you know, like I was talking last week about, you know, I thought UEC was the best buy for the week. So, you know, making more money. Link is in the pinned comment below, or just go to stevebartonmoney.com and it'll be the first thing that pops up. It looks like this. I will show you here. Boom, right there. Subscribe to our newsletter. Click that, right? Or it just comes up as a pop-up. All right, and going back to uranium here. Our favorite commodity at the moment. Gold divided by uranium, and gold outperformed by 1.6% for the week. So last week it took 50 pounds of uranium to buy 1 ounce of gold. This week it takes 51 pounds of uranium to buy 1 ounce of gold. I think swapping some U308 for swapping some gold for U308 is a prudent idea, and this is literally how you can do it. You can go right here to your PHYS. So remember, we want to sell on this end of the chart, and we want to buy on this end of the chart, right? So sell some PHYS and buy some SRUUF, right? SRUUF was flat for the week. They still have 66.2 million pounds of uranium. It's a great discount right now. It's 13%. I think now is a buy. I have a limit order in down here just because I have so much of this stuff at 12.50, and I think that's a little too cheap. So, I mean, it got down to 12.55. It got within a nickel of that, and it just didn't hit. I think I got a little too cheap, but anyhow, I'll be looking to get some more if it gets down in this range. If it gets down into the 12s again, I'm just not going to be able to help myself. All right, and Cameco is up what is that, up 0.9% for the week. So your limit order hit for $36. Congratulations. I still like a limit order in there. Same price level, $36. A lot of price action around that level. I think it, hopefully uranium continues to get sold off, and hopefully it'll hit. And so if you're new to the show, this is your limit order right here at $36, and then a stink bid down here at 32. And URNM, same thing, up 0.9% for the week. So yellow stink bid got hit, even got hit down here at $28. So I like limit orders. I mean, now is probably fine, but I think $30 will get hit. So you might as well be patient, wait for it, get it $1.68 cheaper, and then stink bid down in here for $28. And David Oakes, hey David, it says, question. When is a uranium demand and supply deficit going to actually translate into higher prices for the commodity? I don't know. I don't know. But I know that this is cheap and this up here is expensive. And so we're going to buy down here when it's cheap and then sell when it's expensive, which will inevitably happen again. URNJ up 1.6% for the week. We are making history here. Got super cheap down here. That's when we fired another limit order, and I think now is fine for this fund, and then a stink bid down in here for $11.52, and that was just lining up with the previous low. And Uranium Royalty Corporation up 4.7% for the week. So I think limit orders, the limit order for $1.50 hit, which was absolutely fantastic. I think now is fine for this company at around $1.75, and then a stink bid in for $1.50. And Uranium Energy Corporation, just a boss this week, up 7.9% for the week. So we got in at 436 and then 412. And we were past the point of concern on this one. And then it got so cheap, I just couldn't help myself. So I bought more. So looking great. Loving uranium right now. I think it's one of the cheapest commodities that we have on the list. All right, oil, WTI up 4.1% for the week. Closed the week at $64. Brent flat for the week, closed the week at $68. Gold divided by oil is gold underperformed by 1.4% for the week. So last week it took 53 barrels of oil to buy 1 ounce of gold. Now it takes 52 barrels of oil to buy 1 ounce of gold. And speaking of oil, next week I got a busy week as far as guests. We're having John Palladium back on the show. So get your energy questions in, your oil and gas questions in. If you want to hear us rant on the politicians, now is your time. We'll be talking about the Doge Committee, the Trump administration, and most importantly, how we can make money from it. XLE is up 3.3% for the week, so looking great. Placed this bet a year ago. It finally hit a couple of weeks ago. So that was fantastic. Just had a waterfall sell-off right there. And I think more is coming. I think oil is going to get even cheaper, and I hope it does, because I like some of these companies. This is the, 90% of the portfolio that we just buy and hold. And this is the kind of thing that when you're retired, you're just going to collect these dividends from Exxon and from Chevron, and you're going to go fishing, right? I'm not using this as a trading vehicle like I am some of these other ones. This is just a buy and hold, pass on, let your estate decide what to do with it when you're gone. Okay. So new orders here. So the yellow line here at 29, wow, I wish it was 29, 79.25, and then a stink bid down at $75. And then Exxon Mobil up 3.7% for the week. So I got a little too greedy right here. I was looking at it when it was getting real cheap, and then my number was 96 when I was going to come in and do it, and it just never got there. So sometimes I get a little greedy, and this was an example of that. They have earnings coming out on May 2nd, so stay tuned for that. And Chevron is the same. They have earnings coming out on May 2nd. Chevron is up 1.7% for the week, so this is another opportunity here. I don't own Chevron other than what little I've got in XLE, but, you know, look at this. Low RSI. We'll pull this up on the weekly here. Semi-low RSI in the weekly. It's at 38. But on the daily, it's at 36, and it just had a nice little bounce there. Looks like it's going to go higher, right? So, yeah, I think now is a pretty good time to do that. I mean, like, let's say you're a trader and you wanted to trade this and not even do it with options. Let's say it just runs back up to this white line, which is entirely possible. That's over 20% right there. So, you know, and they pay an increasing dividend every year. I mean, like, you know, when you look at these dividends here, let me just go here to the dividend and notice the dividends amounts. We're going to go back here to 2018, $1.12. Oh, and then the next year, $1.19. Oh, and then the next year, $1.29, right? It just keeps going up every year. This is one of those dividend aristocrats where they just continue increasing the dividend, just like Exxon here. Same thing, 82 cents, 87, 88, 91, 95, 99, right? They just keep going up. You get a raise every year. This is why they're great for retirement accounts. All right, moving on. Canadian Natural Resources, up 6% for the week. So they're still in a downtrend, so let's not get too excited here. But your $26.50 limit order hit. Next one going to be down here at $25, and then a stink bid at 23. So those are your new levels. And Blackstone Minerals up 4.4% for the week. Almost ran an option on this one, and then I've just been traveling and busy and didn't get a chance to do it. But this $13 level here is now going to be our new stink bid. And at $14, your dividend on this one is fantastic. It's going to be 10.7% for the week. And we have their earnings coming up on May 5th. So watch out for that. And natural gas is down 8% for the week. So last week I thought this one was going to go up. And the reason I thought it was going to go up was because we have this kind of established trend line right here. And I drew it so pretty with the arrow and in green, and I thought that was going to cause this to bounce on that arrow and go up. So I'm going to have to give a call to the NANON GT, which of course stands for the National Association of Natural Gas Traders, give them a piece of my mind for making me look like an idiot. So we need to delete that line right there. I think the next one that's probably going to catch this will be this 200-day moving average. Right here, that would line up pretty well with a triple bottom. See, we'd have it right back here in early December, and then we have this again in late January, and then lining up again for a little double bottom here. Looks to me like natural gas will probably come down. That's the moment to watch there. It's going to be, right now, the 200 moving average is at $3.06, so watch that level for a bounce. All right, and Devon Energy. Super exciting, up 7.4% for the week. So last week I sold some GDX, which was at the top end of the chart, and bought some Devon, which is at the bottom end of the chart. And so far that's looking like a good decision. We'll see how that irons out. If you don't own any Devon and you want into natural gas, which should be an amazing trade like gold has been for the last year and a half, I think now is fine. Okay, so maybe I'll draw a little red horizontal line for like, get some now, right? And at least get your entry position. But I also think that this 2750 is probably going to come back down and hit that as well. So that I really like that as a limit order. And then a stink bid down in here for $18.25, which is highly unlikely to hit. But if you don't have the limit order set, then it's impossible for you to get it if it does go down there. All right, and Woodside Energy up 2.8% for the week. Had a nice little bounce there. Birchcliff Energy is up 9.3% for the week. So had a massive bounce. You guys got your limit orders in there for $4. Still like that as a buy order, as a limit order. $4, and then a stink bid down here at $3.15. And Paydo up 7.5% for the week. So if you want to take some profits now, I wouldn't shake a stick at anybody for doing that. I mean, especially you just got in down here at 1065, and what is that percentage up? 20%? Yeah, around 21, 22%. Just in a week and a half or something. Pretty massive moves right there, and it's hitting a triple top right now. I mean, it does look like it could push through, but you know, you guys have been getting this around in the $9 and $10 range. You know, sometimes you got to pay yourself, despite what the overall narrative is. Oh, and Joel says, I never miss an opportunity to give you a like for your great videos. Thank you, Joel. I appreciate that. Also, I want to give a shout out here to Andrea, Peter, William, Art Times, Justin, Mana, and the always faithful Matt Bittner. Thank you, guys. I love you guys. I do this for you, and I have a blast doing it. So I'm grateful for any feedback that I get, you know, because I'm literally sitting in an empty room here talking to a camera. All right. Okay. Coal, thermal coal is down 2% for the week. Just getting smoked despite Trump's thing of dig baby dig. And met coal is flat for the week. And our coal ETF got a little bit of love from dig baby dig. All right, it was down in the 13s and then shot up to $17 over the last couple of weeks. So we've had some money coming in. So last week it was 2.2 million shares and 2.2 million assets under management, 780,000 shares. This week, 13.5 million. So we increased by over a million, 1.3 million assets under management and 880,000 shares. So another 100,000 in. We got more money in. Mo share issues. Glencore is down 0.4% for the week. So we've got a dividend coming up here May 2nd. So you might get a little opportunity here. If you miss this one down here, it's $6 for Glencore. It's not much of a dividend. It's only 8.5 cents per share. But you know, got a share issuance or got a dividend coming up. Usually there's a little bit of sell-off when we do that. See, this was our moment back here. Leading up to the dividend, boom, we were able to get it dividend paid, sold off a little bit. Same right here. See how it was up there? Dividend paid, boom. Okay, so you might catch a little bit of that. Maybe this was it back here. I don't think so. I think we'll get a little bit more of a correction. All right, AMR up 4.7% for the week. So I asked Matt Warder about this one, and he said it's good for thermal coal, but not necessarily met, because Trump is looking to build infrastructure in power plants and for data centers and like that. So that's not good for met coal, but that is good for thermal. So what's interesting on AMR here is if we hover over, I love this software right here. It tells you everything you need to know. We look up here at the low, and you can see the low right here was exactly $100. So that just doesn't really tell us that much other than, you know, humans like nice round numbers. And looks like a bunch of people liked exactly $100 for AMR. So if you want to put in a limit order for AMR and you want some met coal here, I like exactly $100 for it. Okay, maybe make it $100.05 just in case I'm wrong about that. But I mean, that literally tells you it right there. If you guys want to try out this software for free, link in the pinned comment below. I love it. It's absolutely amazing. BTU, Peabody, up 0.9% for the week. So we had this bear flag played out, and you can tell by my amazing drawing here of a bear flag. I mean, just absolutely stupendous. So we'll get rid of that now that we all know that it happened. Kind of looks like we might be getting a bit of a wedge pattern here. So let me draw my little lines here, and you can kind of see what I'm talking about. So we got a little bit of a wedge here coming up. Something like that. We'll see if this breaks out one way or the other. Now that I'm drawing this, it kind of looks like a bear wedge, actually. If we draw the pole right here, let me see the histogram. Yes. Yeah, that does look kind of bearish. So we might be getting some more selling pressure here in BTU despite dig, baby, dig. Platinum up 3.4% for the week, so looking great. You guys got in on $900 platinum. Congratulations, good on you. And you did it through PPLT. So hopefully This was my bad. I should have just moved this up to like 83 bucks. Let me put that in there. We right click on that, go to settings, type 83 and hit enter, and there it is. Okay, so that's really where the $900 level is on this thing. I thought it was $82.50 and my math was just off a little bit, but it's closer to $83. So anyways, a lot of you guys got in there. Stink bid at 80 bucks and then a real stink bid down here at 75, which I probably shouldn't even have drawn. And Palladium is up 6% for the week. So again, you got your $900 Palladium in there. Well done. Did it through PALL. So that same $83 level, stink bid at 80 bucks. And if you just want to buy both of them and forget about it, then you got SPPP, which is up 2.5% for the week. So limit orders at $9, and then again at $8.75, and then again at $8.25. I thought about getting more, but I really don't want more than 3% of the portfolio in this. It's just so risky. But this can have some massive moves, and this is one way to look at it, is these comparative charts. Platinum divided by silver, and you can see there's moments in history where you can trade 150 ounces of silver for 1 ounce of platinum, and we're on the very end of that chart trading 30 ounces of silver for 1 ounce of platinum, which is exactly what I did. And same here, platinum divided by gold. I mean, we are down, you can trade 3 ounces of platinum for 1 ounce of gold, and I think it should be the other way around. Maybe not quite that dramatic, but you know, I think trading some gold for some platinum is a awesome speculative bet. And if you want to pause and read my if-then statements here, this is my plan of what to do with it when that happens. Alrighty, and nickel is up 4.2% for the week. So it's hitting right around that 15,500 mark. Got pretty cheap last week with all the sell-offs. NIKL is up 4.7% for the week. So I think I'm going to put another stink bid in here for like $7.50. That seems to lining up with the last low. If you wanted to check the number to the penny, it would be $7.25. So maybe I should make that $7.25. Centaurus Metals is up 36% for the week. So absolutely fantastic. We're saying last week that, you know, if you want some of this company, I'm comfortable with my position here in Centaurus. I think it's 1% of my portfolio, and it is an exploration junior in Brazil. I mean, the riskiest of the risk. Just, yeah, at the bottom end of this channel, you know, nothing real scientific, just getting it sold off, lower RSI, you know, sentiment in the dirt, shot right up, looking great. Now, I think this has a lot to do with the China-U.S. tensions, and if that holds, then this could do really, really well, and I think it's reacted to that. And this one has absolutely reacted to that. This is Meteoric Resources. Now, I watched their presentation. They're up 111% for the week, so in 4 days, 111%, pretty impressive. Now, I watched their presentation out at the Rules Symposium last year. And basically their price point on the stock, you know, for retail like us was around 10 cents or so, shot up a little bit for the Rural Symposium, right? And then just kind of everyone became bored and sold off. And then here we get the China basically saying, okay, America, you can't fire us because we quit. You're not going to have any of our rare earths anymore. And now a project like this down in Brazil. Now, keep in mind, this is just a mountain where they've drilled out some spots and they found out that they got a bunch of rare earths there, right? So it's going to be years before we can dig this stuff up and actually do anything about it, but it went from 4 cents up to 10, okay? I saw this on Monday and I'm like, oh, this company's going to do good. You know, when I saw it on Monday, and I should have got it and I just didn't. And then I saw it on Tuesday and it went up another 26, and I'm like, well, how much further could it go? Well, it could go up another 23 on Wednesday, and then it could go up another 28 on Thursday. So there's your answer. It's probably going higher. You know, super small market cap company, but it's essentially doubled in the last couple of days. It was, 87 million US, right? So limit orders only. You know, don't try to chase this thing, but this company could do really, really well. And exactly what the CEO said could happen, happened. And we'll see if these things stick. If they don't, then this is probably coming back down to earth. But Wouldn't surprise me to see them issue some shares here after getting a little premium, driving the price down, because they're going to have to drill this project out and they got to raise money somehow to do it. So watch out for that. All right, now the Bloomberg is up 1.4% for the week. So got our order in here a couple weeks ago for the Bloomberg. Paid off a little bit, established a position here. Looks like it's rebounding nicely. And iron ore still in the middle of the range right there, up 0.1% for the week. BHP up 2.7% for the week. So got some on this waterfall sell-off. Like this one a lot. Had this one for years. I put a, why did I put the yellow line there? Oh, it's because it's got so much support right back here. Yeah, so stink bids on this one. I don't see any buys right now, but stink bids on this one are going to be around $39 and then a real stink bid at $36.25. And Rio Tinto is up 2.3% for the week. So we've got some resistance right now, which is around that $58, $60 level, around there. I like limit orders at $52 at $48.75. The PIC ETF is up 1.6% for the week. So I just calculated the last dividend right now. If you got it at $34, current price point, your dividend is 3.35%. So it looks like we had a little bit of a kind of megaphone, almost bear flag right here. Waterfall sell-off, bounced at $30. I like a limit order at $30 and then another one at $28. And this is the China ETF. So this one's up 0.3% for the week. Been watching this one. I think a limit order here around $45. You know, once bitten, twice shy. I got into China Mobile and Trump's first term, and then it was basically frozen, and I couldn't own it for, well, I couldn't do anything about it. And I watched the thing double, couldn't sell it. Watched the thing go down, couldn't sell it, couldn't buy more. And then it evened out, and I think after 2 years, I was basically even. It was sold for me. So I'm a little nervous about getting into China, but I think that's one of the reasons why this thing is sold off and is pretty cheap. So the risk is Trump, and he could say that your money is tied up into this thing and you're not allowed to do it. I also got bit by the Russian stocks under the Biden administration. So your biggest risk is your own government. Go figure. All right, and dry bulk shipping. So great ETF for that. BDRY. I'm looking at this level right here, $5.15. I think this is super cheap. I think this problem is going to get solved, and I think we might have a re-rating here. But I don't, there's not enough here to do any kind of options on it, I don't think. I haven't looked at it, but I'm just looking at the volume, and I can't imagine that there would be. But anyhow, yeah, looking kind of interesting. I like that $5.15 level because right back here we got a low of $5.06, and then over here we got a low of $5.11. So I think right around just above that would be nice for a limit order. And Bitcoin is up 1% for the week. I'm recording this on Saturday. I think we're getting some divergence going higher here immediately for the coming week. Bit of a bull flag here, so we'll see if that actually pans out or not. Looks like it's getting caught by the 50-day here. Although a little bit nervous because we have a death cross now in Bitcoin, and that would suggest that it's going lower. This is going to be your initial support line right here, right around 77,000, 77,500. I'm very curious to see how this plays out during a recession and depression. I hope it holds its value and goes up, but I don't like that governments are getting involved in this now, and so we'll see. Thank you guys for being here. Be sure to sign up for the free newsletter and check out the Rule Classroom and the Rule Classroom Plus. We will be over there next week, and you can try out this software, this charting software for free. It's TradingView, and there's a link down below where you can try it out free. Alrighty, thank you guys for always being here, and be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.